All righty, folks. Are we set up, as Jim Cramer says, for a 1987 crash? You and I know we have to talk with Mr. Dan Bird. Dan Bird has come prepared. He's got charts about 1987, 2000, 2008, the COVID crash, the trade war. He's also going to tell us, is the secular bull market dead and has the bear market begun? I know you've been looking forward to this. I've been looking forward to this. Dan, wild Thursday and Friday, closed at the low, which means probably more selling Monday morning. But you're the expert. What say you?
Probably. I think that's the most likely scenario. More selling Monday morning. The key though is the close,
Okay.
not the open.
Oh, the
The,
Monday close. Got it. Okay.
the open might prove Jim Cramer correct.
Might be a head fake, is what you're saying?
Well, we'll see. I mean, that's the thing to watch for. And I'll
Okay.
show you the charts from the other crashes. And they're all different. So it's interesting. So we'll look at all that. But that's the thing to watch for.
Okay.
It's extremely oversold, and I'll show you all of this.
Yeah. Well, let's get into it. I love the fact that you came prepared. You've looked at past crashes in which you're basically trying to help us understand, and thus yourself as well. Is there anything that happened now that is similar and we can identify in past crashes? That's basically the homework that you've done and you're now going to share with us.
Yeah, I want to look at similarities and differences from the ones that have happened in the past. The
Okay.
the, the length of time that they occurred in, the depth, how far down did they go? When did they start to reverse? That type of thing.
Okay. All
Where
right.
were the moving averages when they happened?
All right.
Was it a secular bull or a bear?
Right. Okay. All right. Well, let's get into it. Where do you want to take us first?
All right. Well, first, I want to set the stage and we'll do a little review of Friday.
Okay.
Let me share my screen real quick. Hold
Mhm.
on. All right. Can you see that?
I can. Thank you very much.
So this is my website for anyone that's interested, breakpointtrading.net. At the top is the YouTube channel that I do. I try to do a video at the end of the close every day. So if you want to know what my thoughts are after a crash like on Friday, you can go back and watch Fridays.
There you go. Exactly.
See
And,
what I
and I
thought.
suggest everybody does.
Yeah. Um, and also the newsletter. There's a lot of really good information in the newsletter. Some that I'm going to cover. The charts that you just mentioned, I put together specifically for this show. I literally just finished it like 10 minutes ago.
Hmm.
So
Nice.
we're going to step through and look at those. But the newsletter has a lot of really good, interesting information in there as well. So you can see the market bias
Yeah.
going down again, another leg down. If I actually look at the whole chart, you can see how red it is. And these squares here means that it happened Friday.
Got it.
So I do this at the end of the close. It shows you which ones changed from bull to bear or bear to bull that day. So all those red squares means it happened on Friday.
Hmm.
I don't see any green squares.
Yeah. Ugly day.
Right. And more of these are going to change on Monday. Almost no matter what happens, more of these are going to become bullish or bearish rather on Monday.
Okay.
All right. So not looking too good. Um, the other thing I want to show is the VIX. The VIX is extremely elevated,
Yeah.
as
Didn't
you would
didn't it
expect.
go over 40?
Yeah, went over 40.
Yeah.
So the pink one is the S&P. This green here is the VIX. So it's up here 45, 45.31 is where it went to.
Yeah. That's pretty high.
And it actually closed at 45.31.
Oh,
Just
close
like the
above.
market closed at the low, VIX closed at the high.
Yeah.
And you can see the 12-month rate of change and the moving averages. And it's been above 17, which is the hallmark of a bear market.
Hmm.
So went up, came back down to 17, went back again.
Okay.
Compare it to last August, which was a little bit of a pullback in the market.
Hmm.
And you see the VIX actually went way higher, did not
Yeah.
stay up there very long.
Yeah. What what caused? Does that say it hit 50 or 65 roughly? Is that what that says?
Yeah,
That
yeah,
little
it was way
green
up there, like
bar? Okay.
65.
I don't
So
know what happened.
we're not as high as it was then, but you can see whenever it spikes like that,
Yep.
it often will come back down pretty quickly.
Hmm.
And it
Yeah.
usually, you
The
can
VIX
also see
does
that
its
it happens
things.
just before a rally right
Mm,
there.
okay.
All right. So that's why I said the thing to watch for is what happens at the close.
Okay. The Monday close. Okay.
Yeah. So we get 1,000 points down in the first hour, and then we come back and close in the green. Then
Mm.
that means Wall Street is
Is
is going window
dipping
shopping,
in.
is going
Yeah.
discount shopping.
Yeah. That's funny. I actually bought another stock on Friday morning.
No,
I did.
we're definitely going lower then.
Yeah. Yeah. Well, I bought Nike because I thought the Vietnam tariff was stupid and I thought that would be
Yeah.
walked back. And so
Yeah.
far I'm up. Yeah.
Yep. I mean, that's I put an article from Real Investment Advice, which is a really good site. You can get their free newsletter each week.
Hmm.
I encourage people to read it. I put the link in my newsletter.
Yeah.
But one of the quotes that they had in there, one of my favorite quotes was, "The time to buy is when you won't want to."
Yeah. Exactly. That's definitely something I've learned over the years. Is yeah, whenever
Yep.
you're uncomfortable, that's probably a time to ask yourself some questions. Yep.
Yep. Exactly. So that's one of the things I wanted to show. I
You
also
know,
want,
you know what else is really funny? Just because we're boys. Not only did I buy on Friday, but I actually moved more money into my account.
getting ready.
Yeah, I got to get some dry
All right.
powder in there, man.
All right. Zuber Buffett.
No, 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 nope, 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 not doing that again.
um, if we look at let's take a look at John Carter's monthly
Oh yeah. Oh, that
monthly
yeah,
one.
it rolled over
I've
again.
been I've been talking about this for a long time, since November, right?
Yeah, I remember.
So
Yep.
you can see back here in 22, the market was making new highs and momentum was declining, going down.
Hmm.
Same thing in December, January of this year. Market was making new highs and momentum was declining. I've now put in a "you are here" arrow.
Oh, to kind of, I like that.
So if you want to compare the two to see how much further we have to go,
Right.
possibly, potentially,
Okay.
there they are. All right. So that none of this is encouraging. It's all confirming that the market's continuing to go down.
Okay.
But there's another thing that happened on Friday that I want to show that I thought was really interesting. And as the market has been selling off since the middle of February, and
Hmm.
I've been warning people even before then that we were in that distribution phase
Yep.
all the way back to 1st of January. I was saying we're in a distribution phase. We're going to break. I don't know when we're going to break through, but we're going to break through the bottom most likely, and we're going to probably go down violently. And we did.
And
But
we
through
did.
that whole period, what was happening was there was rotation
Mm.
out of the aggressive sectors,
Yes.
in particular technology, which is the largest sector. Technology makes up 33% of the S&P,
Mm.
the biggest sector of all of them. And you could see the money moving into the defensive sectors.
Yes.
So it wasn't leaving the market. It was just moving to defensive sectors, which are smaller sectors than technology is.
Right. Yeah. I don't.
That naturally pushes the market down, but it doesn't, it wasn't panic selling, in other words.
Yeah, that was. I don't know when I read this. I read so much. This might have been before Thursday and Friday, but I read somewhere, and again, it could be dated now, that if you remove the Mag 7, the S&P 500 was actually up for the year. Now, I don't think that's true now, Thursday and Friday, but it was up like 2 or 3%. I think that was
Yeah,
earlier.
that's possible. I actually put a chart that reflects that in my newsletter.
Oh, cool.
Shows the S&P and then the S&P 500 and then the S&P 493.
Mm-hmm. Wise
So
idea. That's a good idea.
it's interesting. All right, so let's take a look at these. And keeping that in mind, what I just said, that it was rotation out of aggressive and into defensive. So the defensive sectors were holding up pretty well,
Yeah.
even as the aggressive sectors were dropping.
Okay.
All right. That all changed on Friday.
Uh-oh.
So I'm going to step through each one of them, and the charts will speak for themselves.
Oh, jeez.
So
That's
there's
technology. Yeah.
there's technology.
Yeah. That's an ugly chart. That's not good.
That's pretty ugly. You can see it's been going down since middle of February.
Hmm.
First three are the aggressive sectors.
Okay.
Communication services.
Ugly, ugly, ugly.
This is where the internet stocks are. So Google and Netflix.
Yep.
Consumer discretionary.
Yep.
This is where Amazon and Tesla.
Tesla. Yep.
Amazon, by the way, actually held up pretty well. It was definitely down, but from the start on Friday until the end, it actually went up,
Oh, wow.
as opposed to most of the other ones were going the other way.
Hmm.
All right, so those were the aggressive sectors. So just as I said, you would expect those to be down since the middle of February.
Sure.
The rotation was out of these sectors and into defensive sectors, which since this time were actually holding up pretty well. I mean, they were going down a little bit, but not anything like this.
Mm-hmm.
So the next ones I'm going to show are the defensive sectors,
Okay.
and you will see what the story is here.
Mm.
There's staples, huge red candle.
Yeah. Yeah.
There's utilities.
Oh, goodness.
There's healthcare.
Wow. This is, would you call Friday indiscriminate selling?
Well, I'll talk about that in a second. There's
Oh,
energy.
my bad. Okay.
There's materials, industrials, financials, real estate. So yes, I would call it panic selling. I would say
Oh,
Wall
okay.
Street was selling everything. So it no longer was rotation from aggressive to defensive. It was literally selling everything. That's
Okay.
that's that's what
So panic
selling looks
selling. Yeah, that's
right.
panic selling. Those charts scream panic. That's sell everything that's not battened down.
Exactly.
Um, so at least as of now, and again, just to put a time on this because things change so fast these days, we're recording this 10 a.m. Sunday morning. It'll be published 4 p.m. Sunday afternoon. These times are all Pacific. And the reason I
Pacific. It's
say yeah,
Pacific time.
Pacific time, the reason I wanted to put that out there is things could change. But I haven't seen anything yet this weekend that makes me think Trump is going to pivot or soften or change his stance at all. Which,
Right.
if that continues, there's no reason to believe that panic selling doesn't continue. Right? It closed at the low Friday. Is that where
Right.
we're at?
Yes, that's right.
Okay.
Yeah, that's why I say that I wouldn't be at all surprised to see it continue and another gap down even.
Mm,
Now, this is the NASDAQ 100 right here. And the two lines that I have are there's two little gaps over here,
yeah, I
right
see it.
there,
Yep.
right? They're one after another. So I kind of combine them just to show, basically one big gap right there.
Okay.
That's and there's support with this low right here in April, 1 year ago.
Okay.
So this is very solid support.
And that's at roughly 1,700, roughly?
17,000.
Or 1,000, my bad. Dropped to
Yeah.
zero.
It's about 16,700 to 17,000, somewhere in that neighborhood.
Okay.
So I expect to see a bounce in that area.
Mm,
The market is extremely oversold. If you look at the relative strength indicator down below,
mm,
notice when it gets down to 30, the 30 level,
mhm.
notice each time it gets to 30, what happens. Got to 30 right here. That's this support level.
Yeah.
Got to 30 right here. That's right here. We're below 30 right now. We're lower than it's been in a really long time.
Okay.
All right. So that's another area where a bounce typically happens.
Mm-hmm.
An oversold rally, put it that way.
Got it. Got it. Okay.
This does not mean that the decline is over. It just means that markets don't
Little,
go up or down in a straight line.
yeah, little respite. Yep. Okay.
Right.
Okay.
They they will go up and down in a jagged line.
Mm-hmm.
Um, if I look at this is the market cycles chart. So this is the S&P this time. So we fell through the 50% Fibonacci level,
Yeah. Look at that.
went right down to the 38. Actually, there's two of them here. There's a 38 and a 62 Fibonacci, the blue one and the gray one.
Mm.
Went right down to it at the end of Thursday and then gapped down, fell rapidly through it, and went also down through the 50% level. The next levels are down here, which is basically the same place where those gaps were, where I showed you on the NASDAQ chart.
So that's
That's
40,
49.50
49.50. Okay.
and possibly 4,900.
Okay.
4,900, 4,950, somewhere in that area. So that should be pretty solid support
Hmm.
for the short term.
Okay.
We shall see. And this is why I say watch the close, not necessarily the open.
Okay.
The open could get down here very quickly.
Yeah,
We
you
could
could
be
we could
down
almost
we
gap
could be
there.
down here in the first hour Monday.
Yeah. Yeah, we really
But
could.
but watch see what happens at the end of the day. Now, if it keeps going and it doesn't stop by the end, then we're going way down here. We're probably going down to 40, 45,
Hmm.
4,400, somewhere down here.
So the
I'm going to
close
put
is really important. Again, I want to repeat that. So you're saying if the market doesn't have an oversold bounce, that the panic selling may build on itself, and we may see 4,400 next week. Might.
yeah, that's possible.
Okay.
Certainly is possible. I'm going to show some percentages in a minute when I show you all the crashes.
Okay.
But the last one I want to show is my bottom finder chart.
Hmm.
I'm going to use the NASDAQ 100 because there's 100 stocks, so it makes it easy.
Yeah, easy math. Yeah.
So this is the bottom finder chart. You can see where it's at right now, sitting right on the support level. And I've talked about this before. And when I talked about it before, I said the market is not at a bottom yet. It's not there yet. Because when we get this low way back here, even though we came down the 10% level on the 20 moving average, we didn't really get to the 20%, which I'm looking for on the 50. And we didn't get to the 30 on the 200. And I said, we're not there. We've got more to go. But look where we are now. So
Hello.
right now, there are only 7 stocks out of 100 that are above their 20-day moving average.
Wow.
There are only 9 stocks out of 100 that are above their 50-day moving average. And there are only 21 out of 100 that are above the 200-day moving average.
That is wild.
These are all bottoming areas. Now, that doesn't mean it can't go lower. And it doesn't mean it can't stay down there for a while. But just like the chart I showed you before with the relative strength being lower than, every other time it gets that low, it bounces and it's actually lower than every other time.
Yeah.
Same thing here. But doesn't mean it's going to happen right away. So these could go even lower. Now, if you're interested to know which stocks these are that are holding up in such a bad market,
Mm-hmm.
watch my Friday YouTube video.
There you go.
I showed how to search for them, how to scan for them, and I actually showed which stocks were staying up there.
I
Now
like it.
here's the
Go check them out.
VIX.
Mm-hmm.
Here's the VIX down here. Again, back in August, you can see how elevated it was. It on that particular day, you can see it close at the high. The VIX closed at the high. The same thing we did Friday.
Okay.
All right. That's usually where the bottoms happen. You can see right here. Okay. And then finally, the only one that isn't as high as I would like to see it is the put call ratio.
Mm,
There's still too many people trying to find the bottom, trying to buy calls.
mm.
If this was way up here like these were, then I would have no doubt that Monday would be the day. But I think we're getting close, but we could still have some more pain.
Okay. All right.
And again, I will reiterate when I say we're getting close, remember this chart that I showed before. This is market cycle. This is Dow theory. It goes back to 1900 with Charles Dow.
Mm-hmm.
Markup phase. We had a distribution phase that I was calling way back in January.
Mm-hmm.
We dropped through. We started the markdown phase. We had this little bounce, which is right here, continuing to mark down, which is where we're at right now. So there will be another redistribution phase at some point. There will be a point where the market bounces and goes back up, but it will not be the end of the downtrend.
Got it.
All right. There'll be a period where we do a consolidation like that. That could be Monday where that starts. I don't know where it's going to start. We have to wait for it to bounce up. And then I would expect it to start to go back down again, just like it did up here.
Okay.
All right. So far, everything is performing just the way markets usually perform.
Mm.
There's nothing odd or strange about any of this. We're down 17.5% right now. You can see right there.
Yep.
From the high. So 17.5% so far is technically not even a bear market yet.
Yeah, just a correction at this point. Yep.
20% is a bear market.
Yep.
10% is a correction, so we're definitely in correction territory. All right, so now let me show you the charts. Let me show you the crashes.
Yes. Been looking forward to this.
All right, so here is, let me make this a little bit smaller. All right, so this is where we are right now.
Okay.
So this measurement, about 16%, is from the first red bar where we first started going down. 17.5 from the high. Yeah. This high bar here. Okay. But from this particular time, and this is a weekly chart, by the way. So each one of these represents 1 week. You can see last week was a huge sell-off. Mm-hmm. But we've really been selling off each week ever since back here.
Yeah, 5 weeks in a row.
All right.
6 weeks.
So down 16%. That's where we are right now. Notice the other things. And by the way, the other line to pay attention to is this gray line down here.
200-day, or is that 200
that's
weeks?
That's the 200-day moving average.
Day, okay.
Actually, before I do that, because let me put some context around this. Let me go back and show you the secular bull and bear chart.
Okay. Because
that's really the key of what we're looking for. We're looking for when we go below that black line. Okay. And sorry, my cursor just froze up here for a second. It'll take a second to wake up again. It's just started happening like in the last week.
Too many things open, maybe.
Kind of like falls asleep. There we go. All right. So down here, this is on the home page. Anybody can go look at this. So here's the secular bull and bear chart. And you can see the relative strength is at the top. So far during the secular bull, which is the green shaded area, we have stayed above the 40 line. All right, we're heading there very quickly right now. The next one down is the MACD momentum. And this black line here has to go below 0.
Oh, wow.
Like it did back here. So that's got a long way to go. Now this is 2022 right here. Yep. So you can kind of compare where we're at now to 2022. We are actually accelerating up here much faster, which implies we could have a lot further down to go. Yep. Right? But as long as we stay above these lines, we have not broken the secular bull market. Okay. But then the key one down here is this 200-week moving average. And you can see it over here on the right. We haven't gone below that either. Through this whole period from 2013, this is the trade war, 2018 here. This is COVID. Actually, this is the trade war right here, 2018. This is COVID. Even though we traded below it, we didn't close below it.
Mm.
The 1987 crash is back here, all the way on the left. And right now we are heading towards it, but it's really critical, really important that we stay above it, that we do not close below that line.
Okay.
Because if we do, and all of those other, if those other two also confirm, then that's the end of the secular bull market. And that means we may have 12 years of a secular bear ahead of us.
Ugh.
And that
No
doesn't
fun.
mean that doesn't mean it's going to happen. You can look at 22. It didn't get there in 22 either.
Right.
But those are the things to watch for. And this is available to anybody without a subscription on my website. All right, now let's take a look. Let's go back to the one we're currently in. So this gray line down here is the 200-week moving average. That's the line I just pointed out.
Yep.
That's the one we have to stay above. All right.
Okay.
So keep that in mind. 16% down on the red bars right now. The next one is the trade war, 2018. So notice down below, it went right down to that black solid line. That's the 200-week moving average. We're down about 18% total for the previous trade war.
Right.
A little more, 18.5, I think, something like that.
Okay.
So right now we're at 17 and a half. So we're in that range as the last trade war.
Now, let me just be clear, because sometimes we forget things. The last trade war was very much just China. It wasn't a worldwide trade war. It was just China, right?
That I don't think it was just China, but China was the primary one. But yeah, it was mostly just China. Yeah, it was not every
not
country.
not 10% to all countries.
Right. That's right. Yeah, so that is a difference this time. And the first few I show you are in secular bull markets.
Right.
So make that comparison too.
Sure.
All right, the next one is the 1987 crash. That was down 34%.
And again, right
in
to
3 weeks.
Line. Yeah, that was fast.
34% in 3 weeks.
Yeah, it did.
All right, we're halfway there right now.
Yeah, it did 22% in a day.
Yeah, we're halfway there in, it's about 5-6 weeks right now. 1, 2, 3, 4, 5, 6 weeks. We're halfway there in 6 weeks right now.
Okay.
All right, so there's 87, and it went right to the black line. Remember, this is in a secular bull market.
Yep.
Next one is COVID. COVID went down 32% in 1, 2, 3, 4, 5 weeks. 32% in 5 weeks. So we're a little more than halfway there in about the same time frame.
Right.
All right. Now, COVID was very quick.
Yeah, it
so
was the ultimate V shape. Yeah.
Clearly V bottom right there. So the total was about 24% from top to bottom. If we go back up here, we can see the 16%, 17.5 from the top. But if you look at the pink one, 34%, I'm just showing you where 34% would be if we follow
4,000.
If we follow those other ones. That's 4,000.
And that's below the 200-day, to your point.
And that's below the 200-day if it stays there for the whole month. So that is a monthly chart.
Ooh.
So just because it goes below it doesn't necessarily mean yet that it's broken the secular bull. It's got to stay below it for the whole month.
Got it. Okay.
Okay. So if it goes down and we get a V like we did in COVID and it comes right back up, then it doesn't break the secular bull. All right. So that's where we are. There's where 34% looks like 4,000. So just to review, here's the trade war down 18%. Here's 87 crash down 34%. Here's COVID down 32%. And the next one is the .com crash. So this was a very long,
Yeah,
drawn out. This wasn't really a quick crash, but it was down 50% was the total amount.
I remember it well.
Right. But just those, actually it was about the first 6 months, 5 or 6 months was down 26%.
Hmm.
All right. So from October of 2000 until April of 2001, just steadily selling off down 26%, but it was only halfway done.
Right.
Right. So this one lasted a year and a half. That was very long. And by the way, notice where the gray line is.
Mm-hmm. Oh yeah, we're below it for a
This
long
this
time.
was the beginning of the secular bear market.
Mm,
So this is, if this happens this time, this will confirm whether we have started a new secular bear.
okay.
In other words, if it goes below that gray line, the 200-week moving average, tries to get back above it but fails and can't, then that confirms that a new secular bear has begun.
Got it.
Remember, this secular bear last about 12 years.
Mm,
So the last one, which was in the middle of that secular bear, is the 2008 financial crisis. So this one was down 57% total.
wow.
And remember, this is a weekly. This is monthly. Hang on. Let me try something else. Let me do it this way. I think this is the week. No, it's still monthly. All right. I didn't convert this to weekly. Oh, there we go. Yeah, there's 2008.
Got
So
it.
there's the weekly chart. You can see again, it was a long, drawn out start to it, down 24%, but it took from basically November until September, almost a year. It took about 9 months to go down 24%. That's just steadily going down, continually getting news about financial institutions failing, right?
Yep.
Till finally the whole market just gave up right here in
Yep.
October. But again, it's below that 200-week moving average. So this was still in a secular bear market,
Right.
and total down was 57% at this point.
So when we look all of this, again, there's the secular bear and bull, which you've been giving us for the last 3 or 4 years, which we appreciate. But I think what you're trying to highlight for us is the importance of that black line,
Yes.
right? If we could stay above it, certainly don't close below it. The bull market continues, in your words. But if we do
Yes.
break below it, we could we could be below it for a while. That was really what I took from this charts is if we go below
Yes,
it, it
that's
might
that
be
is
a while.
correct. And
Okay.
and remember the secular chart. This is a weekly chart, but the secular chart is a monthly chart.
Right.
So it can go below it, but if it comes back up and closes above it before the end of the month,
Yeah.
in
No
this
harm,
case
no
it'll be
foul.
April,
Yeah. Okay.
right? So it's okay to go below it, but it needs to come back up and close above it.
Mm.
That's the thing to watch. So the rest of the month's going to be really important. It
Yeah. Well,
does
let's
not.
talk about that. So I love this charts. I love this education, but I just wanted to ask you a question because at some point, earnings are really a part of this calculations, right? You take
Oh
all the
yeah.
earnings, you add a multiple, and
Oh,
that's
there are a lot of things coming up. There are a lot of catalysts coming up.
yeah.
We had a good jobs number.
We did on Friday. Yep.
We got CPI next week.
Yeah, CPI headline is supposed to come down 0.3. It's supposed to come way down.
Yeah, I haven't looked at the.
Yeah, I looked at it this morning. It's supposed to go from 2.8 to 2.5 headline.
Yeah,
Core is
and
supposed to go 3.1 to 3.
that would not surprise me. And
Yeah,
that could be the thing that causes the bounce in the market.
and that's just so you know, folks. That's Wednesday, I think.
So here is the headline, the base effect. So you can see a big one drops off.
Yep.
So that's going to help CPI.
Yes, it will.
And then I haven't looked at commodities lately, but commodities were basically flat, looks like
Mm,
the shaded area. So they went down and came back up, but it basically is flat for the month.
Yeah. But we have a lot of earnings coming up. I'm just really nervous that every CEO of a publicly traded company is going to spend ad nauseum talking down their stock. They're going to go less earnings, less sales, more inflation. I mean, it could be a drumbeat of negative earnings announcements.
Yeah, I don't think necessarily it's going to be bad earnings or sales.
No, it's the forecast. Sorry.
Yes, the forecast, and they should. They would be right to do that. That's
Of
what
course
they
they will.
do.
Yeah.
That's what CFOs do.
Yeah.
They want
They're
to
supposed to
they
do
want to
the
set it
least.
up for a big win next
Yep.
quarter or 2 quarters from now.
Yeah.
So
So
yes,
that's
I expect that to happen, and so we're going to get a really bumpy ride. We could, bounce back with CPI, and then the week, actually next week, the 11th is when JP Morgan reports.
yeah, the financials kick us off Wednesday, I think. Yeah.
Here's the earnings calendar. You can look at financials because they come first. Upcoming earnings.
JP Morgan on the
JP
11th.
Morgan on the 11th, Morgan Stanley, Wells Fargo on the 11th, Goldman 14th,
Yeah.
Bank of America the 15th, Citibank.
Yeah, it's
So
going to
the
be
11th is Friday. That's next Friday, which will be after the CPI. So
yeah.
I think I think JP Morgan might be okay, but just like you said, I think a lot of them are going to start to say, the forecast doesn't look too good. There's JP Morgan's chart.
Well, again, let's be clear. These a lot of these CEOs, or if they haven't already, are going to be making plans to go to Mar-a-Lago, and they're all going to try to get in Trump's ear and talk about these tariffs being crazy.
Right.
And they're going to use their earnings calls as another way. I think it's really going to boil down to does Trump have the I don't know what you want to call it, the backbone, the fortitude to not relent. And if he gets softer in any way, he starts to negotiate with Vietnam and Israel and all these other places. Maybe there's some savings grace, but he certainly seems pot committed to not backing down.
Well, the key word that you just mentioned is negotiate.
Yes.
So for him, it's all about negotiating.
So
And
is it your opinion that he came out with these wild, crazy high ones just to force negotiation? Is that where you're at?
absolutely,
All right. So it's
absolutely. And you saw what Israel did, right?
yeah. Well, if you really want to talk Israel actually did that the day before the announcement.
Right.
And that's why Israel was so pissed off because why'd you hit me with 14 or whatever it was when I just dropped all tariffs?
Yeah.
So
Well, I expect the Trump maybe tomorrow is going to announce
some
a
some
new
victories. Yeah.
victory. Yeah, it's called victories. Right.
Yeah, that's what he would be smart to do, for example, on Monday in the Rose Garden. Congratulations, Israel has dropped all tariffs. Then on Tuesday, congratulations, Vietnam has dropped all tariffs. And then Wednesday, India has did this. And he should do one at a time and just keep the positive momentum going.
Right. This is my newsletter, by the way. But there's a particular chart that I put in here. Here's the one about share of sales derived outside the U.S. Look at the Mag 7,
Yeah.
49% outside the U.S.
Half their revenue. Yeah.
And over here, S&P 493,
That's
26%.
interesting. That is interesting.
This is the one right here. So here's the total trade deficit.
Mm-hmm.
All right, you can
Yep.
you can try to figure out the exports and imports, but the black line is the important one.
Yeah.
So you can see not only is it lower, it's going lower, it's lower than it has been, and it continues to go lower.
Yeah.
All right, this is from 1980. So, and I don't think this is a big surprise to most people.
Mm-hmm.
I think with all the tariff talk that's been out there, I think everybody understands now that other countries are charging us more tariffs than we're charging them.
Sure.
I think people understand that. I don't think a lot of people understand what that really means.
Mm.
So what this chart is, if you look at this chart as a redistribution of wealth from the United States to the rest of the world.
Mm-hmm.
That's what this trade deficit chart represents.
Okay.
It's basically transferring our wealth to the rest of the world.
Nah, I'm not sure I buy that.
Why not? You buy that other countries are charging us higher tariffs than we're charging them, right?
Sure. No, no, there's no question. So that's not the
Right.
argument. I'm trying to equate that black line to wealth.
Well, whatever label you want to put on it, other countries are charging us more money for our products
Sure.
than we are charging them.
Also, we export less. We're not an export-based economy,
Right.
right? So there's some of that in there as well. There are plenty of countries that are only export, or mainly export. China being the biggest one. They have very low personal consumption, consumer
Right.
consumption. Um, the other thing we get from this is obviously a lot of folks repatriate dollars and buy 10 years and,
Mm-hmm.
facilitate, financing of our crazy ass debt.
Right. Yeah, that's
So,
true.
yeah.
That's true. We didn't even talk about the 10-year.
Yeah, dude, the 10-year hit. I mean, it went as low as I think 391. I think it closed at 4. It's going to be
Yeah.
wild to watch that. And oh, by the way, Scott Bessent told us pretty matter of fact that his goal is the 10-year down. And he took it from 4.8 to 4 in about 3 weeks. So, mission
Right.
accomplished.
Right. And might go even lower than that.
I think so. Yeah.
There's the 10-year right here, right now.
Yeah. Where's the bottom? Like 3.8 ish? Oh, no, that's 3.6.
3.6 down here is the low from last September.
Yeah.
So not even a year ago.
Yeah.
So 1 year ago is basically over here on the left side of the chart.
Okay. Gotcha.
So we're basically last August, pretty much where it was last August. And it was dropping just as fast as it is right now, last August.
True. Yeah, this week coming up is going to be interesting. CPIs, well, Monday, what if anything, or shoot, I mean, let's be honest, Trump could do something tonight, or he could do something Sunday for all we know,
Right.
or he could do something Monday. We got CPI on Wednesday, which it always makes me nervous when the experts have such a big gap, right? 2.8 to 2.5, that's a big gap. Sets up potential disappointment. And then, yeah, I think earnings on Friday, it's only going to be the big boys, but man, the week after, woo, earnings are going to be wild to watch.
Yep. Then we got earnings, and then we have another jobs report
Yep,
at
jobs.
the beginning of May, which probably is going to start to incorporate some of the layoffs in it.
Yeah, the Fed. Yeah, for sure.
So that's going to probably look a little worse. And then we have the Fed meeting right after that.
Yeah, and obviously we have Trump begging, pushing the Fed to start cutting rates now, lessen the blow from tariffs. We got Powell basically saying no thanks. Don't know where inflation's going.
Yeah.
It's again, I stand by the fact that I think the June meeting is going to be interesting. I think May is nothing.
Yeah, that could be. I think if you start to see unemployment start to ramp up even higher, like it went to 4.2 this month and didn't really have any of the layoffs in it yet.
True.
In fact, the participation rate actually went up.
Mm-hmm. That's what happened. Yeah.
Part of the reason it went from to 4.2 because more people are in the market now.
Yep, that's exactly right.
But next month, if it starts to ramp up above his 4.4 number,
yeah,
then I mean, what's he going to do? He will want to drop rates for that reason. And if CPI does come in light, I mean, there's no reason not to drop rates in May.
Yeah, well, I don't know. We'll close on this topic. The wildest thing I saw Thursday, Friday, is the smart money was betting on 2 rate cuts Wednesday, 3 rate cuts Thursday, 4 rate cuts Friday morning, and 5 rate cuts by the end of Friday. That was wild to watch.
Yeah, I think that's kind of funny. It's funny when I listen to even on CNBC saying, the Fed has to cut rates because look at the market crashing. The Fed doesn't care about the market. The Fed's job is not to shore up the stock market. That's not what they do.
Exactly.
what the market does has nothing whatsoever to do with what the Fed's going to do.
Oh, I agree. I agree.
So
Well, one thing for certain is you will be taking care of your audience Monday through Friday next week. It is undoubtedly going to be an action-packed week. Let's remind people what your YouTube channel is.
sure, it's breakpointtrading.net right here. That you well go to the website, and at the upper right is the link to the channel.
Very, very cool. And where are you today? You're like 1,100 people, or what are we at? Yeah, look at you,
Yeah,
1,100.
1100. Yep, 1100.
Rock
And
on,
I
rock
also
on.
have a playlist over here with Technical Tuesdays in it. So these basically are just training. I do one every week, just training about technical analysis and the market, and how to read charts, that type of thing.
Love
There
it.
is one in there about Bitcoin. It explains how Bitcoin was initially created and how it grows and everything you'd ever want to know about Bitcoin.
Very
I had a
cool.
friend that said, I don't know anything about Bitcoin. My financial advisor is suggesting maybe I should get a little bit. So I don't have any clue what Bitcoin does. And I said, well, go to my channel and watch that particular one. It's easy to find because it's the only one that has Santa Claus in the picture.
Yeah.
And the next he watched it that night. The next morning he sent me a note, says, I now really understand Bitcoin. Thank you.
Nice.
And I
Did
said,
he
you
uh
now
did he move
you now know
1%?
more than 95% of the population.
Nice. And did he buy 1%? Did he move some money in?
I don't know. I don't know what he did as a
Nice.
result,
That's cool.
but he
Very
understands
cool,
it
man.
better.
There you go.
So
That's half the battle. Well, folks, at the end of the day, Mr. Dan Bird is going to bring the heat Monday through Friday. You've got to tune in after market closes. What time do they post?
7 p.m. Eastern.
Very cool, folks. For you on the West Coast, 4 o'clock. Take care, buddy. I appreciate you.
All right. Have a good weekend.